Hello guys, I'm Paris, the options guy, and welcome to the No BS Training Podcast. This is episode number 16 of the podcast, and thank you very much for tuning in. And today we are going to talk about how the US CPI data came out last week and what are its implications, and then the first rate cut of the cycle which is going to come in next week, and what will be the major effects of the rate cut on the market, on the economy, and all that stuff. And then I'm also going to talk about the other data points which are going to be very important for the market next week. Furthermore, we are also going to talk about the 3 new IPOs that are coming in our markets and should you apply to them or not. Okay, so this is going to be a very interesting episode, so do watch it till the end. But yes, without any further delay, let's just start with the episode. Starting off with what happened in the previous week and what were the major events and what were their outcomes. Okay, we start off with US CPI first of all, and the CPI on a year-over-year basis came out at 2.5%. Okay, which was in line with what the market was expecting, and the core CPI came out at 3.2%, which was also in line with what the market was expecting. So pretty much an inline CPI data which the market was already expecting, and because of which the market didn't really react very much to the data. But what was a bit interesting is that on a month-over-month basis, the CPI was a bit higher than expected. Although again, the markets did not really care a lot about that. Okay, so getting that out of the way, then we had the PPI data on Friday, and same thing, PPI data came out almost in line with what the expectations were. PPI data came out at 1.7% on a YOY basis, okay, on a year-over-year basis, and the expectations were 1.8%. And core PPI came out at 2.4%, where the expectations were 2.5%. So almost in line, or a little bit below expectations, you can say. But again, same thing with PPI data also, that on a month-over-month basis, the PPI data was a bit slightly higher than what the market was expecting. Okay, so these were the two data points that we got, and what these data points are indicating that is that the inflation is trending down. For the inflation is trending down and getting to closer to the target of what the Fed is expecting, where the Fed's target of the CPI inflation is at 2%. So what I want you to understand is that sure, the CPI data is going down, but in many parts of the economy, or in many essential goods and services of the economy, the CPI, the inflation is at a much higher level. Like take fast food for example. Okay, CPI is higher than 5%. CPI was higher than 5% in fast food services. Okay, and then there are many other things like insurance. Okay, in insurance the CPI is in double digits. Okay, on a year-over-year basis I'm talking about it. So in double digits we saw in CPI going up in insurance space. Okay, so sure, everybody is rejoicing that the CPI is coming down and all that stuff, but you need to understand that in many essential parts, essential parts and services, or you can say goods and services of the economy, CPI is much higher, or general inflation is much higher. And I've actually written a post also about it, or not a post, but I've written, I've talked about it in my previous episodes also, that CPI, sure, it is coming down, but you have to understand that inflation in general in many goods and services of the economy, of the US economy, is still very high, and it is not being reflected clearly in these CPI, in these inflation numbers. But still, we will move on from that, and I will make a detailed post about how these the way the CPI is measured, the way inflation is measured, or any other economic indicator, not any other, but still many economic indicators are giving a faulty reading. Okay, so do follow my LinkedIn, where I post these articles, where you guys can also get a lot more information about what is actually happening in the economy, and what things are not in the limelight, which are also important to keep in check when you are dealing with how the economy is performing. Okay, one more thing which I really found interesting was that the super core inflation, okay, which is core inflation removed after, if you remove the housing part of it, okay, super core inflation is actually rising. Okay, and I will show you guys a good chart of it. That you will see, you will be able to see the chart right now. And if you see, since the last few months, super core inflation is actually rising. Okay, so you have to understand that that inflation is not really going down as greatly as we are perceiving it to be. Inflation is not going down very fast. Rather, in some parts of the economy, inflation is still very high and continues to be high. And so in this time, if the Fed is cutting rates, this could cause inflation to rise again. So definitely I will talk about this in more coming episode also, because now we are also going to get the first rate cut next week, and I'm also going to talk about that in just a few minutes. But yes, these were the few data points that we got last week, and these were the few things that brought basically these were the few key data points that we got in the last week. But yes, after that, let's talk now about what is the next week holding. What are the major points, or what are the major events that you need to look out in the next week, and what will their impact be on the markets? Now for the next week, we only have two major events, or actually one major data point and one major event. And first of all, we have the US retail sales data on Tuesday, where the retail sales is expected to come out at negative 0.2%. On a year over year basis. Okay, and the core retail sales is expected to come out at positive 0.2% on a year over year base. Okay, on a year over year basis. Okay, so what the US retail sales will tell you is that how well is the consumer doing, because I'm talking about this since a few I've also written an article about this. Yes, I have written an article about this on my LinkedIn page, where I said that the consumer is weakening up. Okay, the consumer no longer has money to spend on stuff. Okay, so this data point will tell you a lot of things about, is US economy slowing down, and are we looking at a impending recession in the US market. Although I do believe that US has already been in a recession since quite a while now, but you know what the economic data is suggesting is that US is not in an in a recession as of now. But I believe that deep down we are already in a recession, although my beliefs do not really matter. What matters is how the data comes, because that is what the market will react on. So keep the US retail sales in check. This data point will definitely affect how the market moves on Tuesday, how the US markets move on Tuesday. Okay, so after that, that is fine. Okay, you can say important data point, but the more important event that is happening next week, which is going to be very important, is the Fed interest rate decision. And the markets have already priced in a 25 basis point rate cuts, that a rate cut. That is, the market is expecting that we will get a 25 basis point rate cut, which will be the first rate cut of the rate cut cycle next week. So I think definitely we will get a rate cut in the next week. But what is more important is the comments that Fed's Jerome Powell gives after the rate cut, because the 25 basis point rate cut has already been factored in by the markets. So the markets will not move if the markets just get a 25 basis point rate cut. The markets will move on the comments of Jerome Powell that will come after the rate cut announcement. Okay, so there is a rate cut announcement which will be on 11:30 Indian Standard Time, 11:30 p.m. in the Indian Standard Time, and half an hour after that, there is the commentary by Fed's Jerome Powell, or you can say the press release by Jerome Powell. And that is what will be more important, because that will tell you what is going to happen in the future. How is the Fed looking at the markets? However, one thing to keep in mind is that just in case if the Fed does not cut rates, okay, you will see a very, very good sell-off in the market. So be ready for that also, just in case. The chances of that happening are very slim, but they are not zero. Okay, because sure, the CPI has also started to come down, but again, if we do not get a rate cut, okay, if we do not get a rate cut, you will see a very brutal sell-off in everywhere, in all markets of the world, you will see a very, very brutal sell-off, because now people are really, vouching for the Fed to cut rates fast. Okay. A lot of people are desperate for rate cuts, especially US banks. Why am I saying so? Is because the US banks are sitting on huge unrealized losses on their bonds. Okay. So what they need is they need markets to cut, not markets, but Fed to cut rates so that their losses on in their bonds can be reduced. Okay. And so they can free up their capital. Okay. So just in case if we do not get a rate cut on Wednesday, keep this in mind that you will see a very, very brutal sell off in the market. So if you want to trade in the US markets, then you have other brokers, okay, which are forex brokers who also can let you trade in the US markets. Although I don't suggest that you trade in them, because they have a high amount of leverage. Okay, you can take a very high amount of leverage in forex brokers, 1:2000, 1:1000 also, very easily. However, when this event will be started, there will be a cap on the leverage. But what I would, if you want to trade these events, okay, so you can trade them with the help of forex brokers. If you guys want to know more about the forex brokers, do let me know. But okay, what I am saying is that even if the rate cuts are over here and the Fed's Jerome Powell says nothing which is extraordinary out of the blue, we can still see a sell-off after that. Why am I saying so? Is because this is sort of the buy the rumor, sell the news case over here. Okay, a lot of people have already taken positions in the market that the Fed will cut rates. Okay, and when the actual news comes out and there is nothing which is extraordinary, or there is nothing which is out of the blue or surprising, then you can still see a sell off in the markets, because a lot of people who are unaware that this news has already been factored in, they will start buying. Okay, they will start buying, and the people who have already taken positions will start selling. Okay, so that's why you can still see a sell-off in the markets, and I'm going to talk about that in the market analysis video also, where I give you a technical view of the markets. So yeah, stay tuned for that. But as of now, these are the two major events that you need to keep in mind for the next week. But now let's move on to the 3 IPOs that are coming in our markets, and I'll give you a review for all of them and should you apply to them or not. Now talking about the 3 IPOs that we are going to see next week. First of all, we have Western Carriers India Limited, okay? And this is a logistics company, but we will get to that in a second. First of all, this IPO is a 492 crore rupees IPO, out of which 400 crores will go to the company and 92 crores to the promoters who are selling their stake. So a very good amount of the IPO going into the company, which is a bit of a positive thing that you can say. First, let's talk about, should you apply to this IPO for listing gains only? Okay, so the answer is, as of now, no, because the listing gains as of now is being indicated at 33%. That means the gray market premium is indicating a 33% listing gain. So as of now, for listing gains, it is not really worth it. So what you should do is wait for the listing gains to at least go above 40%. Okay, and this IPO is open till Tuesday, that is 18 September. It had already started on Friday and it is open till Tuesday. So if by this last day of the subscription, if the gray market premium goes above 40%, then you can think about applying in this IPO for the listing gains. But until then, I would recommend stay away from the IPO for listing gains, because we have other 2 options which I'm going to discuss with you who have better listing gains. Okay, so that is fine. Now let's talk about what this company does, and should you apply to this IPO, or should you invest in this company for the long run? Should you invest in this company based on the fundamentals? So what this company does is that it provides logistics services. Okay, it provides value value added logistics services. Like let's say that is normal delivery via via railways, okay, but what this company can do is that it can provide you some other services alongside, when you are delivering through railways, okay. It can provide you special packaging solutions, or not packaging but special delivery solutions, and all of that stuff, okay. So this is a rail focused company mostly, okay. Sure, it does give transportation or logistic services through other means also, like air, water and all that stuff, but it is mostly rail focused, okay. And it is an asset light logistics company, which is a good thing when you're trying to expand a lot, or expand at a very rapid pace. This is one of the good things. But yes, it has many clients from many different sectors, such as FMCG, pharmaceuticals, chemicals, metal, oil and gas, retail, all that stuff. So it has a very diverse range of, you can say, uh, customers, you can say. And it has a total of it has served more than 1100 customers. So the customer base is very big, and it has many big companies also, like Tata Steel, Hindalco, Hindustan Unilever, Coca-Cola and all that stuff. So a very diverse range, which is also one of the good things when you're so you're not dependent on one single consumer for your revenue, or not consumer but one single customer for your revenue. So having a very diverse range is another thing which is good for your company. But again, now let's talk about the revenues, basically the financials. So if you see from 2022 to 2024, the revenues have only gone from 1475 crores to 1691 crores. So yes, there is growth in the revenues, but the growth is pretty slow. But on the other hand, if you see the profit after tax, which it has gone from 61 crores to 80 crores, still slow growth in profit after tax also, but still a bit more faster as compared to the revenues, okay. So one thing that you need to keep in mind is that this is a logistics company. So the way these guys continue to shape their profit margins will really impact in the coming years, how fast they can grow, okay. As of now, if you see, revenue and profit both are a bit slow, but if you want a company which is a pretty steady mover, okay, it has pretty steady solid revenues and solid profit after tax, then you can look into investing in this company. If you want some company which is going to give you a very high growth, then this is not the company. Rather, this is a company which is sort of a very steady mover company, which is going to give you a steady growth over the next few years. And one more thing is that with the amount that these guys raise, the 400 crores, they will definitely look into uh, paying off some of their borrowings, okay. So this will definitely aid their bottom line also. By bottom line, I mean profit after tax. This will definitely aid their bottom line also. Another thing is that in the logistics space, their ROC is first of all at 29.2%, which is the highest in the logistics space. So this company is a very solid, you can say, performer, okay. Sure, it might grow slowly, but it is a very steady performer. That means it is not going to face a lot of jitters. In the future, it might see a bit of an acceleration also in the revenues and the profit, but as of now, I'm not going to say that definitely that will happen, but definitely there are chances that that might happen, given that these guys are now thinking about reducing their debt also. But as I said, that it has the highest ROC also in it, in the whole segment of specialized, you can say, logistics. Now, yeah, this is a bit of a specialized logistics company. So in my opinion, this is a very good IPO. This is a very good company if you're not after very high growth. If you are after steady growth, this is a very good company, and the IPO is also priced very good. It is not priced expensively or anything. It is fairly priced, even good. In my opinion, it is priced very good, okay. Not even like reasonably priced. It is priced good in my opinion, because of the fact that the price to book value of the specialized logistics company is around 6x, okay, but it is going at it, the IPO is being priced at 6.4x of the book value, which is 3.4x of the book value, which is again very good. And in my opinion, you can definitely apply to this IPO if you're not looking for explosive growth but for steady growth, okay. I'm really sorry, but yes, after that we have the Arcade Developers IPO, okay. And first of all, let's talk about the gray market premium. So should you apply to this IPO for the listing gains? The answer is yes, you can apply to this IPO for the listing gains because it has a gray market premium going on of 54%, which is very good in my opinion, definitely above the minimum requirement of 40% that I go for. So definitely you can apply to this IPO for the listing gains. Please do not apply in the Western carriers. This has much better prospects of listing gains. So apply to this IPO for listing gains. But yes, this IPO is a 410 crore IPO, out of which basically the whole 410 crores is a fresh issue. That means the whole 410 crores will go to the company, and this IPO will open on Monday and will close on Wednesday. Another thing is that I'm really sorry. Yeah. So now what this company does, first of all, let's talk about that. So it makes high-end, you can say luxury, not luxury basically, but high-end homes, which are on the higher end of the price spectrum. These guys make those residential developments in Mumbai. Okay, so something like Suntech Homes, Suntech Realty. Okay, so Suntech Realty will be their sort of direct competitor, you can say. And these guys not only make homes, but they also redevelop buildings. Okay, so they make new projects, but they also redevelop the older projects or redevelop the older buildings. Okay, they do both of these. So the good thing about the company is that they are in the sort of the high end space, which I am really bullish on. As you guys know, I am bullish on the luxury space or the affluent class of India in the next 10 years, you can say. I'm really bullish on that. So these guys are aiming exactly at those people, and this is what I really like about the company. So as of now, if you see the revenues, okay, in March 2022, the revenues were at 237 crores. In 2023, revenues had actually dipped at 224 crores. Okay, but what is really good is that in 2024, revenues just rocketed to 635 crores, which is again, I think this is mostly because they launched a new project which had amazing sales. But after that, if you see profit after tax following the same route, in 2022 and 2023, profit after tax remained near 50.8 crores, but in 2024, the profit after tax all the way went up till 122 crores. So definitely, I think this is a start of a new upcycle in both revenues and profit after tax, and they can continue to move up in the coming few quarters or in the coming few years also, for that matter. Okay, so if you see what these guys are now looking to do with the 400 crores that they're raising is, first of all, they are going to pay up for the costs, the extra cost that comes in their ongoing projects, and then they will also they are also going to use the fund to acquire new land in different areas. Okay, so should you apply to this IPO? The answer is definitely you should look forward to applying to this IPO. In the near term, in the next 1 or 2 years, we might again face a bit of a crunch in the real estate sector, but for the long run, this company, I think, is poised for a very good growth, because the whole, you can say, the high end space of the market is really, I think, in my opinion, has a very good growth potential even right now, even after the explosion of home prices in Mumbai or in any sort of metropolitan regions of India. I think we still have a good amount of space or good amount of demand left. In the next 1 or 2 years, you might see a bit of a slowdown, but as the interest rate cuts start to come into the market, the cost of taking a loan for homes will go down, which means a lot more people will be encouraged to buy homes, and because of which the demand will again start to kick back in. So I think you can definitely apply to this IPO for the long run. The company also looks very stable in my opinion. So yes, that was it for Arcade developers. And now the last one is Northern Arc Capital. So this is a 770 crore IPO, out of which 500 crores will go to the company and 277 crores will go to the existing promoters. But first of all, let's talk about, should you apply to this IPO for listing gains? And the answer is again yes. The listing gains right now are at 46%. If the listing gains continue to hold above 40% till the last day, then you can definitely look out to apply in this IPO for the listing gains. Okay, so that is out of the way. Now let's talk about what this company does. So this company is, first of all, offers retail loans to underserved households of India. So MSMEs, or in villages where the mainstream players are not available or are not willing to give out loans, this is where this company steps in and gives loans to those people. Okay, so they've served over 100 million people in India as of 2024, and they have 1.73 trillion. They have facilitated 1.73 trillion rupees of financing, which is a very big number, considering that they are operating in the MSME space, or you can say the not the leading spaces of India, not the tier 1 space, not the tier 1 cities of India, the tier 2, tier 3s and all that stuff. When you are working in that space, getting to such high amount of financing is also a big deal. Another thing that they do is the AUM management. Okay, and by AUM management I mean portfolio management. Okay, so they also have a portfolio management services. They have 10 alternate investment funds. Okay, which actually 10 alternate investment funds and 3 PMS funds also. So and in those they manage around about uh, um, 12,000 around about 12,000 crores. So in that also they are managing a very good amount of money. Okay, so they are one of these types of players, you can say, or this company is an NBFC. So they are a type of NBFC which is very diversified. They are not just into lending, but they are also into fund management, which makes them a very, very good player in terms of stability. So when the retail side of things is not working very well, they have the portfolio management side of things, which can still come in and push up the revenues, or you can say at least keep the revenue steady. They are not just focused on one single sector, or one single business. They are multiple businesses, right? As I said, one is lending, another is, you can say, fund management also, and another thing is placements, which I do not know what those are, and that's why I cannot comment on that. But still, even lending and all that fund management can definitely help the company be pretty like stable, because with PMS and with AIFs, the thing is that you are putting in money for the long run. So once you have that AUM which is stuck with you, which has come into your company, that is going to stay with you for quite a while. And that means you have a bit of a steady income coming from those vehicles, from those you can say from those financial vehicles. Although yes, you can say that once the cooling period is off, the people can withdraw their money and all that stuff, but still most of the people who invest in AIFs and PMS are not investing for the short run. They are investing for the long run in both of those things. Okay, so that is one thing. And now let's look at how their revenues and profit after tax has gone up. Okay, so revenues, if you see, have grown from 916 crores in FY22 all the way up till 1900 crores in FY24. So a very steady growth, in a very good and a very steady growth in revenues. And in profit after tax also, if you see, profit after tax has gone from 181 crores in FY22 all the way up till 317 crores in FY24. FY24, if you must have seen that profit after tax is going a little less slower than the revenues, you can attribute this to the cost of their capital, because in from FY22 to FY24 the interest rates have also risen. Okay, so if they are lending out more money, that means they will need to get more money from somewhere, right? That they can lend out. So getting this money would have costed them more throughout FY20, from FY22 to FY24, which would have definitely affected their net interest margins, because of which I think profit after tax has gone slower than the revenues. However, it is not at all something which is like really slow or anything. It has just been a little slower than the revenues. Okay, that is one thing. So in my opinion, should you apply in this IPO or not? And the answer is yes. You should definitely apply to this IPO because of two reasons. First of all, the lending space. The lending in India, the lending space in India, the loan space in India is growing at phenomenal speeds. You must have seen the retail loan numbers, you must have seen the overall loan numbers. Banks are facing capital deficiencies because they just don't have enough money to lend out to people. So in the lending space, the future ahead definitely looks bright. Sure, you might think that this sort of very fast lending can lead to systematic risks and some sort of a risk if people start defaulting all of a sudden. Definitely that is one of the things, but I think RBI has definitely handled the situation very good. So the lending space, first of all, is really good. Another thing is the portfolio management space, and that is also at a very fast pace, that is growing also at a very fast pace. People are investing into the into these portfolio management services at a very, very fast rate. So the future for this company is very bright, at least looks as bright as of now. Sure, there might be regulatory changes which can change the story ahead, but we cannot really predict all of those changes all of a sudden. We'll need to just go with the flow and see what changes come. But as of now, the future looks very good for the company. So you can definitely apply to this IPO. And even the IPO is not priced badly at all. It is fairly priced, you can say. It is not like very cheap also, but it is not very expensive also. It is fairly priced. So you can definitely apply to this IPO and hold you can say invest in this company for the long run. I think this company can be one of those companies which turns into multi-bagger, into a very big player, and becomes a very big multi-bagger in the coming few years. Personally, I think that can really happen. So these are the three IPOs that are going to come in our markets for next week. Now let's move on to the market analysis for the next week and where the market can move in the coming week. Now talking about the market analysis for the next week, if we see Nifty over here making a very good candle, very good bullish candle, made a bullish candle, made a bearish engulfing candle, and now it has again made a bullish engulfing candle. So definitely a lot of people would be confused as to where the market is going. And same thing for Bank Nifty also, making a very bullish candle this week. So what can we do for next week? Now one thing to keep in mind is that the Fed interest rate decision is going to come on Wednesday. Okay, so until then, first of all, we will talk about what we can do and what we can do after that. Okay, so in the daily chart, first of all, if you see, Bank Nifty is looking pretty bullish over here. So any sort of a dip that you get in the market, you can use it to take a bullish position. And what you can do on Monday also is that if you open flat and get a small dip near 51,800 also, in near 51,800 to 750 also, you can use that to take a bullish position again in the market for a good space on the upside, at least till 52,300 or 52,400. Okay, so in the first half of the week, we can expect one more momentum on the upside in both Nifty and Bank Nifty. Okay, and talking about Nifty also, if you see over here, it is looking pretty bullish. Yes, on Friday it looks like the candle is not very bullish, but that is only because of the first candle of the day. After that, Nifty has just consolidated. Okay, so In Nifty also, a very good place to take a long position is near 24,250 to 240. Over here, if Nifty comes, then you can think about taking a bullish position over there also. Okay, so in the daily charts also, Nifty looks like we might get one more move on the upside, at least till 25,600, 25,600 to 700. Okay, that can be an easy target for Nifty on the upside if we start moving from here. Okay, so in the first half of the week, on Monday and Tuesday, we can definitely see a move on the upside, okay, in both Nifty and Bank Nifty. So keep that in mind. Now, what can happen after the Fed interest rate decision, which is on Wednesday? Wednesday at night, okay? So on Wednesday over here, what can happen is that we might see a bit of consolidation because nobody wants to really take very big positions. But what might also happen is that we might see a bit of sell-off on Wednesday. Why am I saying so? Is because a lot of people have already taken positions factoring in the 25 basis point rate cut that the Fed is going to do. So what they might do is that they might try to even exit their positions and take their profits. Okay, so on Wednesday, you might see some volatility and some sell off also. Keep this in mind. But on Monday and Tuesday, you can keep a bit of a bullish view on the market. On Wednesday, you can see a sell off. However, if on Wednesday you don't see a sell off, it can happen on Thursday and on Friday also. Why am I saying so? Is because of the very same reason that the 25 basis point rate cut that the Fed is going to do on Wednesday is already factored into the market. So the market will not react positively again after the 25 basis point rate cut. It might open with a gap up on Thursday, but you will see a sell off after that. So on Thursday, don't think about taking a buying position in the market. Rather, think about taking a selling position from higher levels. Okay, if you open with a gap up, it will be best to take a selling position over there, because a lot of people who have already taken buying position in the market expecting a 25 basis point rate cut will be booking their profits, and we need to be with those people who are booking their profits, not with the people who are taking new buying positions on Thursday. So I hope you guys understood that. So if somehow the Fed does not make a 25 basis point rate cut, then it will be outright bearish and we will open first of all with a very big gap down. So in that gap down also, you can take a short position. After opening with a gap down also, you can look at price action and take a short position because of the very big panic that will be going on in the market. Okay, so I hope you understand what you can do in the coming few days in the market over here. Okay, so in the first half of the week, in the first 2 days, you can be bullish. On Wednesday, things might be volatile or a little bit negative. So even if they are volatile on Thursday or Friday, you can see a sell-off in the market. So in the first half of the week, you can be a little bullish. In the second half of the week, it is better to be a little bearish because of the very reason that the 25 basis point rate cut has already been factored into the market, and that will not cause the market to move up. Rather, that 25 basis point rate cut will cause the market to see a bit of a sell off. Okay, so that is the view for the next week. However, if something changes in between the week, you want to be updated about it, right? And that's why follow watch my videos every day, watch my market analysis videos every day, because every day there I give you an analysis of what can happen in the coming day based on what happened on the previous day. Okay, so and that was it for the market analysis for the next week. So yeah guys, that was it for this week, and thank you very much for watching till the end. I really appreciated that you waited till the end and watched till the end. But yeah, if you guys felt that there was something wrong with the episode, that you need something changed in the podcast, that I should do this addition or change this thing, then do let me know in the comments. I will definitely make that change. But I hope you guys understood something new from this podcast. I hope you guys got some new information from this podcast which was useful for you. But yes, with this, I don't have anything else to say for this week. But yes, I will be back next week and we will again discuss some new topics and new information for the next week. But yeah, right now I will take my leave, and yeah, I'll see you guys in the next week. Bye bye.